Well, it's time to take a look at the weekly commodity recap with Darrell Holaday, Country Futures, Frankfort, Kansas. Darrell, we close out the week, the quarter, and the year, and unfortunately, pullback for the day in particular. But overall, you look at 2023, it has been a wild ride in the commodity markets. Unfortunately, here at the end of the year, it looks like we're kind of on the downside rather than the upside swing. What's your take for the week? What's your take on 2023?
Well, that's a good question. That's a good way to look at it. As a matter of fact, part of what I wanted to talk about is that, it has been a volatile year, a lot of change. But in the big picture on the grain side, we talked about this, I know, a year ago, that the big bull market in the grain market was over and we were going to go lower, and we did. We'll look at them specifically, but the grain, if you go year to year, corn, wheat, and soybeans, all basically a little over $2 lower than they were a year ago. And so that wasn't without some up and down, obviously, and continued volatility, but the fundamentals just continued to get weaker. And we kind of ended that way this year. We started higher to begin the week, and we continued to hold some strength higher on the week, but it was more short covering, a lot of spread trading, little more uncertainty mixed in with the Russia-Ukraine situation, with a port attack in Odessa by Ukraine, and those types of things. But the corn and beans turned lower this week and ended lower simply because the forecasts have just gotten much wetter and much cooler for central and northern Brazil. And the areas of Mato Grosso, like western Mato Grosso, it's a little late for them. They're going to have been hurt. But everything else, we're looking at, as we go into next week, right now, all the models lining up 5 to 7 inches of rain across a big part of Brazil, specifically the driest areas of central and northern Brazil. So see whether that develops, and if it does, that put pressure on the market. And that there just wasn't a lot of other news. The export news is pretty quiet at last week of the year. Export sales report was out Friday, was just kind of neutral, another big surprise, and it just traded as a rule. We had long liquidation, had 383 contracts delivered against the January soybean contract on Thursday night, which kind of set a negative tone also. So some strength early in the grains. Matter of fact, March corn went up over the 480 level again, but once again rejected that level. January soybeans traded up over 13, 22, 23 area, but once again rejected it and closed below $13 on Friday. So quite a swing, but once again negative across the board on the week. March corn closed at 471, down 2 on the week. December corn closed at 503, down a penny. But January beans 1293, down 7 on the week. New crop November 1246, 12 lower. March Kansas City wheat 642, up 19 on the week. New crop July 646, up 15. On a year-to-year basis, corn was down 207 a bushel, December 31 to December 31 on the spot contracts. The January soybeans, soybeans as a whole, were down 226, and the wheat market, the hard red river wheat market, down 246 from where they were a year ago as we closed the year. February crude oil on the week 71.65, down 191. On the livestock side, the cash market was stronger in cattle, but the futures were defensive. We started the week trading that cattle on feed report, which had the placements once again a couple percent better than expected, but we had a couple factors that really affected the market. One, we started lower off the report. We had some really tough winter weather that moved through over the weekend, South Dakota, Nebraska, even parts of Kansas. It certainly changed a lot, the conditions of the lots in a lot of areas. That tend to be somewhat supportive, and packers need cattle. They want to fulfill this pipeline, and they really found themselves somewhat short bought, and they felt like they were going to be steady, stronger cash. And at times with the futures struggling, didn't know whether that was actually going to happen. But packers, they did eventually get in that market on Thursday and into Friday, and we ended up being higher. 172, 173, 170, even as much as 174. So you'd have to call the market 1 to 2 higher on the cash at least. But the futures market likes to look down the road and concerned about weaker beef trade that's going to occur in the latter part of January. Both beef and pork struggle a lot of times on the wholesale markets in the latter part of January. It becomes a tougher month to move product. And we've already seen that happen on the pork. So in the end, the futures were lower on the cattle after being somewhat higher, significantly higher at times over the week. So a lot of volatility back and forth. The hog and pig report was bearish. With basically the September, November pig crop supply, market hog numbers on the front end somewhat negative from a supply standpoint, and we continue to see hogs weighing about 6 pounds more than they did a year ago in the Midwest. So again, that set the tone for a lower. The futures market traded that various hog and pig report. We basically were lower throughout the week. Did see some bouncing back and forth, but in the end lower. On the week, February cattle 168.50 down 2. The April cattle 172.25 up 23. January feeders down 45 at 222.30, and the March feeders down $1.30 at 223.10. The February hogs 67.97 down 338. The April hogs 74.85 down 272. On the year, the spot cattle contract up $11.63 year to year. January feeder or the spot feeder contract up 38.58 year to year, and on the hogs down 19.63 on a year to year basis.
That again is Darrell Holaday, Country Futures, Frankfort, Kansas. You can always give him a call or learn more at 1-800-292-4038. Do remember, trading futures and options involve risk of loss and may not be suitable for all investors. Do consider these risks before investing.